Hello, everyone. These are some tips that you need to know when financing a motor vehicle and the impact it can have on your ability to purchase a house.
Before I tell you all these tips that are going to ruin your finance guy's day, I wanted to start off by saying I never ever want you to use dealership financing unless it's incentivized from the manufacturer, and that's only because the rates you can get from the manufacturer are generally a lot better than you're able to get at your banks and credit unions. Otherwise, I really don't see any benefit in using dealership financing outside of convenience. First thing we want to talk about today is when you put a credit app in with a dealership, what your expectations are and what the dealership is really doing. So how many of us have heard a dealership say, hey, just do a credit app with us. We work with a bunch of banks and a bunch of lenders. We'll see who will give you the best rate. The dealership is not interested in getting the best rate for you every time as much as they're interested in getting the biggest paycheck. Each one of the lenders that they send your information to that responds back with a rate and term and payment for you, basically a loan, a deal, they also have a paycheck connected to that for the dealership, an amount of money they're willing to pay the dealership for recommending you to their lending. Typically, the higher the rate means the more the dealership is making from the lender as a kickback or referral for your business. So that's why it's so important to make a big stink if the rate seems a little high. As a matter of fact, it's important to ask every single time, what is the buy rate? This is the rate that you were approved for from the bank, and the sell rate is what they'll try and tell you. Always ask what the buy rate is and ask if you can see it. Number two, basically, I never ever want to use a bank through the dealership. I'd rather use a credit union. A bank gives the dealership the ability to mark the rate up 2 points. Let's say Wells Fargo gave you a 5%. The dealership can actually legally tell you a 7%. This is why it's so important to, again, ask for our buy rate. Number three, dealership finance people cannot tie product to rate, but it happens all the time. What does this mean? This means that the dealership finance manager is telling you that in order to get you a really good rate, you'd have to buy the warranty. The bank would actually cut the rate down a little bit because they want you to be covered. So if anybody ever says this to you, just know that the rate that they're offering to you if you buy the warranty is the rate that you're already approved for. This is illegal, and basically any finance person willing to do this is a desperate person who's probably not very good at their job in the first place. It also leads me to believe that maybe they already screwed with other stuff since they're willing to go down this road. It's a good point in time, if this does happen, to check my rate and anything else this person has tried to sell me. Number four, aftermarket products, things like Gap, Tire and Wheel, aftermarket service contracts or warranties. Should you buy them? I think that's very situational. And if you need a service contract, if you need Gap, then definitely get those products. They are available for a reason. But I certainly don't think you should pay what the dealership asks for those products. Every single finance guy is going to present to you those products as if they're non-negotiable prices. The typical price for a warranty should be no more than $2,500, and you shouldn't pay any more than $600 or $700 for Gap insurance. The truth is, the extended service contract, the Gap, and anything else they're trying to sell you will have a very inflated price, and the first price they tell you will be the worst price. So no matter what, even if you don't know how to negotiate, basically just say, I'm not interested unless it was cheaper. Don't let them offer you less coverage to get the price down. Tell them you're interested in the top tier coverage, but not at that price. Number five, stop buying aftermarket products on your lease. If the finance guy is trying to sell you some kind of fabric protection or paint protection or tire and wheel for your lease, tell him to kick rocks. You don't need any of those things to ensure that you're going to get maximum value when you bring it back. Just keep it in good shape, run it through the car wash once in a while, keep up with your scheduled maintenances, make all your payments, and you should be fine. All of that aftermarket jazz is bullshit. I'm going to have to make this part one, and part two will have the other 5 tips I have for you. I promise they're equally informational and worth watching. Thank you so much for all the support, guys. And for more tips and tricks just like this one, please follow Billy the Car Kid.
Hey there, my name is Alejandro and I'm a mortgage agent in Toronto, Ontario, and we get this question quite often. How does a car loan affect my mortgage qualification? In a mortgage application, we look at your income and your debts, which we call liabilities. But each liability or each type of liability is calculated differently. For example, your credit card debts. We don't really look at your minimum payments. We don't really look at your last payment. We look at your outstanding balance and calculate 3% for your monthly liability. But when it comes to car payments, those payments are fixed. So it doesn't really matter if you make a lump sum payment to bring your balance down, your payments remain the same. So those are the ones that usually hurt you the most. Now, on top of your home ownership expenses, you usually have a little bit of extra room to have other debts. But if your car loan is outside of that room, then that's gonna cost you. It's usually about $100,000 for every $400 in car payment.
Here's what your car budget should look like based on your salary. It shouldn't be more than 15% of your monthly income, and you should try to avoid buying a car on loan, but if you can't, here's a guide.